Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 7 o'clock in New York on Monday, 9th day of September 2024, and this is the evening report for gold and silver. Gold continues to trade effectively above $2,520. Today's gain of $8.10 in New York trading, as well as overseas activity, adding an additional $2.90, has taken the most active December contract to $2,535.60. Silver gained 1.5% in trading today. That is an additional 42.5 cents, taking the most active December contract to $28.69.5. Gains in both gold and silver were much stronger when you take into account today's dollar strength. The dollar gained 0.44%, taking the index to 101.651. It is clear when we look at a daily chart of the continuous contract of gold futures that the former level of resistance that occurred at approximately $2,510 beginning on the 12th of April, the 20th of May, as well as July 16th, was effectively taken out on Friday, the 16th day of August, when a large $50 plus price spike took gold well beyond $2,510 to effectively take the level of former resistance become the current level of support. Although gold has certainly found a new and higher level of support above $2,515, we can obviously see that gold has been consolidating and forming a base at these new price levels. That can be seen in a candlestick chart as alternating candle color with no clear defined trend up or down, and the sideways trading activity and price range that we've seen recently in gold is much more clearly expressed when we convert our standard Japanese candlestick chart into a Heikin Ashi or Japanese average chart. As we've talked about before, the key difference between a Heikin Ashi and Japanese candlestick chart is how they fix the opening price. In a candlestick chart, the opening price is fixed from the real open, whereas in a Heikin Ashi, the opening price is fixed from the midpoint of the prior candle, and that's why during periods of rallies, we see consistent green candles all the way up and consistent red candles that occur during a corrective period. Our technical studies allude to the potential for gold during this leg of the rally to trade as high as about $2,585. That would be a 1.618 extension of the last leg of the rally, which took gold from about $2,400 to an intraday high of about $2,500 per ounce. And another aspect that is noteworthy about today's climb in both gold and silver is that it occurred concurrently with dollar strength. The dollar gained about 0.4% in trading today. The overall characteristic of gold pricing recently was a pop above $2,510 and then sideways trading activity. When we compare that to recent action in silver, silver has had much more volatility, moving from $27 per ounce the first week of August up to the highs of about $30.50 by the last week of August, and then falling to these lows of $28, a low that was above the previous low at $27. When we look at the last two trading sessions, we can identify a 2-day candlestick pattern called a piercing line. A piercing line occurs first after a defined downtrend. You get a large red candle with the lowest low of the price decline, followed by a green candle that opens at or below the closing price of Friday's activity and closes at or above the midpoint. That is exactly what we have identified here. However, you do not take this as a buy signal unless you get the confirming candle on the following day, tomorrow, which would be composed of a large green candle, the larger the better, with a higher high and a higher low. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.